All right, take a deep breath. It is that time of year that can cause stress for so many. Tax day is coming up quickly. Monday, April 15th, you know, but one Connecticut financial advisor is taking the pain, hopefully, out of the process by educating people on the new tax laws and the legislation that impacts your investments. Joining us, Studio 61, Timothy Baker from Metric Financial. Thanks for being here.
Thanks for having me.
We're talking last-minute tax tips. I know you talk a lot with Angelo on the weekend, so welcome to the weekday mornings.
Yes,
I want to chat with
you.
Chartered Financial Analysts as we kind of break down the financial word for people. That is what you are, but what does that mean for somebody at home?
Yeah, Chartered Financial Analyst is it's an industry designation. It's quite difficult to get. They do lots of things, right? Mostly analysis, as you would imagine. I came up in the industry on the investment side doing research analysis, those types of things. And my goal now is to get outside of that and offer it directly to retail investors, which is investment management and financial planning with an eye towards helping people keep fees low, which matter a lot in the long run.
All right, so let's get people some news they can use this morning. What should we be thinking about as we prepare to file our taxes with the IRS? Yeah,
so a really good idea. Always talk to, if you have a financial advisor, talk to that person. If you have a CPA, talk to that person. There's a tax layer survey that said 57% of people don't really feel comfortable about what they need to do or know to file their taxes. A good financial advisor and CPA, probably more importantly, can help with all of that.
So let's give folks some tangible tools here. What types of questions should we really be asking?
Yeah, there's lots of them. So I try to identify the ones that we get most commonly. Number one is, what tax bracket am I in, right? There's this common misconception that I'm in a 15% tax bracket, a 22% tax bracket, but it's a blended rate. Some gets taxed at this rate, some at this rate, some at this rate. So you might think you're in a 25% tax bracket, but you're actually in a 22%. Another big item that comes up is, why am I getting taxed on my mutual funds that are not inside of a retirement account when I didn't sell anything? It's the way mutual funds work. Somebody else sells theirs, they have to raise funds to give that person that money, and that generates capital gains. Another big one is tax loss harvesting. That's been a little bit more difficult to do. That was kind of easy to do in 2022 when the market was down. We were basically, other than the last few days, basically been a moonshot since then. So it's harder to find losses to take, but it's not a bad idea when you do have down markets. And then the last two just relate to retirement plans. One is, should I max out my 401k or 403b? It depends. Don't forget on what things are going to look like in retirement. Everything gets taxed in a different way: Roth IRAs, 401ks. And the last is, can I contribute to a Roth IRA? It depends. There are contribution limits and income limits, so make sure you fall into those income limits.
Sometimes I think we approach this on cruise control, but I know that there can be changes year to year. Any big one that stands out to you?
Yeah, so the most recent was the Secure Act 2.0, and that made a few changes. Number one, as for anybody who's paid attention, the age for taking required minimum distributions from an IRA or a 401k have changed a lot over the years. It used to be 70 and a half, then it was 72. It's now 73, so you don't have to take distributions from your IRA or 401k until you hit 73. That's actually going to change to 75 in 2033. So that has a big impact, right? That's the way the government forces you to take money out of your tax deferred account so that they can collect their taxes on you. That's really the big one. And then the other one that comes up is for people that have 529 plans. If they don't need to use those funds for college expenses, it used to be you just get taxed and penalized, but now there are some provisions for moving that into a Roth IRA, so it's important to look into things like that as well.
All right, with just about 30 seconds to go, a top investment tip for somebody who's watching this morning.
Yeah, watch out for mutual funds. They've been around for decades and decades and decades. There's a lot of interest in the financial industry for keeping you in those mutual funds. They tend to be very expensive. They tend to be very tax inefficient. So we encourage people to look at alternatives. There have been a lot developed over the years.
Tim Baker with Metric Financial. You'll be back with us and Angelo soon. I'm sure. Nice to meet my friend.
Happy to come back anytime.
Happy Tax Day.
Yeah, absolutely.
To you anyways.
Enjoy.
I found one person who likes Tax Day.